Hey, good morning. Welcome to the morning brief. Today is Tuesday, June 27th, and we just had some 8:30 numbers come out. And you can see these are yellow medium impact or orange medium impact items. Core durable goods order month over month was 0.6%, greater than expected. Durable goods is something that is really good for the economy. This is very positive. Durable good orders month over month, 1.7 versus negative 0.8%. Again, big swing. This is very, very positive for the economy. This certainly sends you some doubt, at least that the quote recession or the slowdown is actually happening. So we really have mixed signals within the market. That probably will continue to be the case through the summer. 9 a.m. we have HPI, which is a housing index, and the S&P Case-Shiller Composite 20-year or 20 housing price index year over year. That's coming out. At 10 a.m. we have a red item, CB Consumer Confidence, new home sales, and Richmond Manufacturing. All of these numbers are very important. So we got some at 9, some at 10, and that's it for the day. I would be careful around 10 o'clock because the consumer confidence can really move the market. That being said, let's look at charts. The daily, while we had 4 days down, and then we had an up day, we also had another couple of down days in a row. But look, we are getting very, very close to a 38.2 Fibonacci, which is at 43.63.50. And that's a very, very close to, you expect a bounce there. Now, where can it go? I've been thinking about this pattern. What is this pattern? Is it going to chop sideways, more downward? I think we might come down to the 50, which is 43.25 area, but over a few days and maybe come back up. And this could be the beginning of an M pattern. So you always want to ask yourself, what is the pattern? What is the pattern? What is the pattern? Constantly, and I do that all the time, intraday as well as on a daily chart. But this could be, if we bounce here, this could be the next little leg back up to the double top, and then the classic M pattern. We'll have to wait and see if that actually develops. Let's take a look at the inventory. Inventory was correlated, so we had a down day yesterday and down inventory. However, even though price fell off heavily towards the end of the day, inventory came back up. So some late day buying happening. So maybe some buy the dip folks started to come in there. That's kind of interesting. Let's see. Interesting overnight action because the range is pretty small, 71 to 87. That's only a 16-point range. For lately, that's been a pretty, that would be considered a very narrow range. So that's kind of interesting as well. Where do we have support and resistance levels? Definitely around the 4,000, 4,400 area. Some good confluence around 44.27. And some around 44.50 on the bottom side. We've got some at 43.59, 43.25, and 43.03.50. So those are your support and resistance levels on the intraday. We have a stock trader's almanac that is 47.6 is the stock trader's almanac. Historical bias, let's say, as to what could happen. That's what it says. 47.6% the market will be up, which means we have a negative bias for the day. Hope you have a great day, and remember to comment, like, and subscribe. Have a great day. Bye. Hey, thanks for watching the morning brief. Check out my website for more information, oneononetrading.com. Take a look at the Troy levels, a trade location finder for the futures markets. Help you find those levels of support and resistance that are just so hard to find. I also do personal coaching and mentorships. So go ahead and take a look at my website, oneononetrading.com. Thanks.